The financial world loves to invent complex narratives to make people feel like they need a PhD in international relations just to protect their savings. But the reality of what is happening right now with the Pentagon watchdog reports and global military chaos in 2026 is actually simple when you strip away the noise. Most investors are completely panicking because they have spent the last few years relying on predictable defense spending and stable global supply chains, but they do not realize that complexity is just a status signal for people who want to feel smart but stay poor. If you cannot explain your investment thesis to a 12-year-old, then you are not actually investing. You are just gambling with your life savings on public networks. We are seeing a historic shift where government agencies are slashing departments under new efficiency mandates, causing massive internal whistleblowers to reveal non-compliance with federal civilian protection laws. While international tensions in regions like Iran escalate to catastrophic levels involving automated artificial intelligence targeting systems, people are looking at this situation and assuming that because global stability is fracturing, they need to drastically overhaul their portfolios, trade volatile defense sector stocks, buy physical gold, or hedge against imminent currency collapse. That assumption is completely wrong, and anyone waiting around for the world to suddenly become a peaceful, predictable place before they start managing their money properly is likely going to be waiting a very long time. The institutional markets are currently in complete shambles because long-term macro investors do not trust government spending projections, and they are demanding much higher yields across the board to compensate for the risk of sticky structural inflation fueled by endless geopolitical conflicts. When the broader market loses faith in sovereign stability, it does not matter what headline drops on the nightly news, because the underlying borrowing costs for mortgages, auto loans, and everyday business credit will stay elevated. Regardless, the real secret to building wealth during a massive geopolitical and structural economic shift like this is not trying to time the exact day a conflict ends, or guessing which defense technology contractor will secure the next multi-billion-dollar government contract next week. True financial freedom comes from embracing a flat, boring, and utterly predictable routine that relies on the absolute law of compounding interest rather than macro market timing. I currently manage $150,000 in assets at 27 years old, and my entire strategy relies on keeping things so simple that it almost feels lazy. I keep roughly 20% of my total portfolio sitting entirely in liquid cash equivalents, earning a guaranteed yield between 3 and 4%. While the remaining 80% is automatically funneled into broad market index funds every single month without fail. People love to laugh at index funds because they think they are too slow, but trying to beat the market by day trading geopolitical headlines or chasing volatile asset classes is just a guaranteed way to bleed your principal to zero. The modern government regime wants to aggressively restructure its internal operations, which means massive budget reallocations and sudden personnel cuts that completely blindside the traditional defense sector. When government contracts dry up or get tangled in federal compliance investigations, speculative tech companies, automated AI systems providers, and highly leveraged aerospace corporations are always the very first things to get crushed. If your entire net worth depends on the federal government maintaining a perfect, predictable flow of defense capital, you do not have a financial plan, you have a ticking time bomb. The smartest thing you can do right now is lower your own lifestyle inflation. Aggressively pay down any variable high-interest debt like credit cards or personal loans, and store your dry powder where it actually yields a guaranteed return. We are moving into an environment where disciplined savers are finally being rewarded, with short-term treasury yields and high-yield cash accounts providing a safe haven that requires zero effort and zero cognitive strain to maintain. You do not need to stay up until 3 in the morning reading Pentagon Inspector General reports or listening to talking heads on television. Guess what will happen at the next Congressional Armed Services Committee hearing? All you need to do is automate your savings, ignore the temporary volatility in your brokerage account, and let the boring discipline of dollar cost averaging do all the heavy lifting for you over the next decade. The market will always find a way to punish people who try to get rich quickly through complex tactical trading strategies, while quietly rewarding the lazy investor who simply refuses to touch their portfolio during a global storm. Stop looking for a magical macro loophole, accept that global volatility is staying for longer, and let your money sit quietly in diversified index funds while you go live your life. It is honestly hilarious to watch the average retail investor scramble every single time an international conflict hits the headlines. They think that by analyzing every syllable of a Pentagon press conference or an admiral testimony, they can gain some sort of edge over the institutional algorithms that trade thousands of times per s-econ. They buy expensive geopolitical newsletters and subscribe to premium tracking software just to end up underperforming a basic target date fund or a simple equity index. The truth is that the entire financial media ecosystem is designed to keep you in a state of perpetual anxiety because anxious people trade frequently and trading frequently generates massive commissions for Wall Street. The moment you realize that your personal opinion on international military policy does not matter to your portfolio is the moment you actually start making real money. I do not care if a government department cuts 90% of its compliance staff. I do not care if they use traditional target teams or automated artificial intelligence software to execute strikes. None of those tragic global events alter the fundamental mathematical law that spending less than you earn and investing the difference into globally productive assets over 40 years makes you incredibly wealthy. The people who are currently crying about high interest rates and global market instability are the same people who over-leveraged themselves on highly speculative tech plays when capital was cheap because they assumed the good times would never end. They built their entire financial existence on the assumption of permanent economic serenity, and now they are paying a massive price for their complete lack of vision. Building a resilient portfolio means planning for the worst-case macro scenario while remaining completely passive in your execution. If you have to check your smartphone portfolio app more than once a month to make sure you are not going broke, then you have structurally failed at asset allocation. You are letting your raw human emotions dictate your financial future, and emotions are the fastest way to turn $100,000 into $20,000 in the blink of an eye. Look at the reality of the global economy right now, with energy prices fluctuating wildly due to Middle Eastern tensions and sovereign nations printing endless amounts of money to fund domestic and foreign obligations. You cannot solve a structural multi-decade geopolitical debt problem by simply moving numbers around a spreadsheet in Washington. The global market knows this, which is why long-term bond yields are staying high, despite intense political pressure to force them down. International investors are demanding a premium because they know the actual purchasing power of flat fiat currency is being eroded by massive national deficits that now sit at $39 trillion. When a sovereign nation is forced to borrow money just to pay the interest on the money it already borrowed, you are witnessing a structural macro trap. The only logical response as an individual human being is to acquire fractional ownership of real assets that cannot be inflated away or destroyed by political decree. You want to own pieces of global businesses that possess real market pricing power, because when their raw input costs go up due to war or supply chain blocks, they simply pass those costs directly onto the end consumer. Broad index funds give you ownership of those exact businesses without requiring you to do a single minute of corporate research. You do not have to read confusing balance sheets. You do not have to evaluate changing executive management teams. You do not have to guess which microchip or artificial intelligence product line will succeed next quarter. You just sit back completely detached and let the collective intelligence of the free market do the work while you focus entirely on increasing your primary income source. The obsession with finding the next big macroeconomic trend or the next high-flying defense stock is a psychological disease born out of pure laziness and envy. People see someone on social media make $1 million off a speculative option trade during a geopolitical crisis, and they immediately feel like they are missing out on an easy win. What they completely fail to see are the 99 other retail traders who lost their entire life savings doing the exact same thing. The human brain is structurally wired to focus on the flashy outliers, while completely ignoring the boring baseline statistical reality. My baseline reality is that I am a 27-year-old with $150,000 that is compounding quietly without requiring my daily attention, or causing me a single sleepless night. I do not wake up stressed about international market futures. I do not look at pre-market trading data before I have my morning coffee. I do not care if the domestic stock market drops 30% tomorrow, because a 30% drop just means my automated monthly investment buys 30% more shares for the exact same amount of cash. That is the literal definition of turning macro volatility into a personal structural advantage. But you can only execute that strategy if you have the psychological fortitude to leave your accounts completely alone when the world looks like it is falling apart. Most people simply cannot do it because their fragile self-worth is entirely tied to the daily fluctuation of their digital net worth. They feel like absolute geniuses when the market chart is green, and they feel like total failures when the market chart turns red. That extreme emotional volatility is far more dangerous to your long-term wealth than any policy change the Pentagon or a new efficiency committee could ever implement. If you want to win the game of personal finance, you have to completely detach your human identity from the market. Treat your investments like a monthly utility bill that gets paid automatically, and then go focus your time on something that actually brings you real personal fulfillment. The entire narrative around these historic watchdog reports and geopolitical standoffs is being blown completely out of proportion by media companies who need shocking content to fill a 24-hour news cycle. Yes, it is strange that government agencies are openly ignoring federal compliance laws. Yes, it is unusual to see automated automated artificial intelligence systems making critical errors in real-time military operations. But your daily personal financial decisions should remain exactly the same regardless of what happens in foreign territories. You still need a liquid emergency fund that covers 6 months of your actual living expenses. You still need to maximize your tax-advantaged retirement accounts before speculating on anything else. You still need to avoid high-interest consumer debt like the literal plague. These basic rules do not change based on whether inflation is at 2% or 8%. They are universal mathematical principles that have stood the test of time across multiple centuries of human economic history. The people who survive the upcoming economic shifts are the ones who accept macro reality exactly as it is rather than how they wish it would be. They do not base their personal investment strategy on the desperate hope that the government will bail them out with low interest rates or new subsidies. They adapt to a higher for longer interest rate environment by cutting out their unnecessary lifestyle expenses and expanding their baseline savings rate. It is a cold, brutal, unsexy process that requires you to sacrifice short-term digital dopamine for long-term physical security. But the alternative is spending the rest of your life trapped in a perpetual cycle of financial dependency where your survival depends entirely on the whims of a central bank or a government budget committee. I prefer to take absolute control of my own balance sheet by keeping it lean, efficient, and completely detached from the speculative mania of the crowd. When you stop trying to look smart and start focusing on being disciplined, you will find that wealth accumulation becomes a mathematical inevitability rather than a lucky lottery ticket. The new global macroeconomic regime of 2026 is going to completely weed out all the tourists who thought investing was an easy game where everyone wins automatically. It is going to punish the over-leveraged tech investors, the speculative day traders, and the people who used their brokerage accounts like a casino during the low-rate era. But for the patient investor who kept their cash ready on the sidelines and maintained their monthly automated index fund allocations, this volatile period will simply be remembered as another historic long-term buying opportunity. Stop overcomplicating the situation. Stop looking for a secret investment loop that does not exist, and just let the flat, boring reality of compounding interest do what it has always done for centuries. You do not need to be an expert to build an extraordinary financial life. You just need to have the deep discipline to execute an ordinary plan for an extraordinary amount of time. The markets will eventually stabilize, the geopolitical noise will eventually fade into history books. But the choices you make today regarding your savings and your debt will impact your trajectory for the next 40 years. Choose the boring path to freedom because the exciting path usually leads straight to financial ruin. Just automate your systems. Ignore the media commentary. Let your cash yield its guaranteed return and allow your broad market index funds to grow quietly while you enjoy the view from your own sideline.